Welcome back to TechKidFX for another quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the quant chart. And before I start the video, make sure that you give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And at the time of this recording, we have managed to flip the key area at around the $133.2 mark into a key area of resistance, and that is why we are seeing a bit of a pullback here on the quant chart. And before I start the video and give you the short-term and the long-term scenarios, I want to first take a look at a chart pattern that we had here on the charts, which is a double bottom, which is right here, that was giving us a breakout to the upper side. And yesterday we saw the breakout out of the double bottom to the upper side, and its target area back to around the $135.2 mark has been fully maximized, and that is proof that our technical analysis works. And giving you a recap of what has been happening so that it can also give you the short-term scenarios that I'm expecting to play out here on the quant chart. You can see that quant, after making it to an all-time high, we started the bear market where we had been seeing lower prices in this massive ABC corrective structure, which took us back to around the $40.1 mark. And after seeing the bear market low, we started another bounce to the upside in a move that has been obeying the Elliot structures, where I have this Elliot structure in blue, having that as the first wave, then a wave 2, a wave 3, a wave 4, and then a wave 5, making its peak at around the $229 mark and completing the formation of that higher Elliot wave count 1 to the upside. And after seeing the formation of a higher Elliot wave count 1, whatever we expected next is the formation of a higher Elliot wave count 2. And using the Fibonacci's, I had sketched out a minimum retracement area to the lower side in the formation of this wave 2, which lies between the fib level 0.5 and the fib level 0.718, and it is within this target area that I was expecting quant to give us the low for this higher Elliot wave count 2. And because wave 2 is a corrective wave, we also expected to see an ABC corrective structure, which we are seeing right here, having the wave C giving us a low at around the $95.5 mark, and there are chances that the low at around the $95.5 mark might be the low for this higher Elliot wave count 2. And after seeing the formation of a higher Elliot wave count 2, whatever we expect next is a bounce to the upside in the formation of a higher Elliot wave count 3, and connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that higher Elliot wave count 3 at the fib level 1.618, which perfectly lies at around the $400.1 mark, and that is the minimum that I would expect quant to do on the long-term scenarios. And getting to the short-term scenarios, within the formation of this wave 3, we also expect to see fractal waves in formation within this wave 3, and I believe that is what is playing out here on the quant chart, where we can term these as the first wave to the upside, then a wave 2, then a wave 3 might be in formation before we see a wave 4, then a wave 5, fully maximizing the formation of this higher Elliot wave count 3 to the upside. But for now, we don't have much of a confirmation that we have started this impulsive movement to the upside, because there are still chances that we might not have seen the bear market, the low for this higher Elliot wave count 2, which was my initial primary scenario here on the quant chart. And we could be seeing this as a massive ABC corrective structure, having this as the wave A, then this might be the wave B, before we make one more new low in the formation of this wave C within this red target area to fully maximize the formation of that second wave. That is still a possibility that could play out here on the quant chart, but giving you minimum target areas that we need to continue holding above for us to say that whatever we are seeing over here is a 5-wave structure to the upside in the formation of this higher Elliot wave count 3. Using the Fibonacci's, I can connect the fibs from the low of this wave 2, from the low of the wave 2 to the high of that, to the high that we made at around the $136 mark yesterday, and that gives me target areas that we need to continue holding above. That is the fib level 0.382 and the fib level 0.618, which lies between the $122.9 mark and the $114.8 mark. In case we continue holding within this red target area over here, then there are chances that we might continue unlocking higher prices in the formation of this higher Elliot wave count 3. But for now, we we need to be a little bit patient so that Quant can continue unfolding and give us more confirmations for us to say that we're in the formation of that higher Elliott wave Quant 3. And also taking a look at the indicators here on the RSI, we are trading at around the 56 mark, meaning we have massive room for us to support any movements to the upper side and also to the lower side. And if I also take a look at the MACD, here on the MACD we have printed a bearish cross, meaning lower prices are still coming our way. So let's be patient and see how that plays out, and I'll keep you updated.